buzz.
Good to see you again. And you guys hit the nail on the head. It seems like this divergence got everybody a little bit shaken up yesterday, where we had Nvidia and the Qs doing very well, and then we also had the Dow Jones and some other things pulling back. Like was mentioned before there, I'm not too concerned about that, because what's happening is you have your leaders leading. And if it's a sports team or if it's the market, I don't think there's anything wrong with your best players scoring the most points. And we're seeing that with Nvidia, we're seeing that in the semiconductors, and we're seeing that with the market overall. And if we take a look at the Dow selling off, where we have the semiconductors and the NASDAQ doing really well, looks like it's about to break yesterday's high, then that just shows that there's a rotation into more risky assets, and assets in which people are okay and market participants are okay putting a little bit of chips on the table on things that might be a little bit risky.
Yeah,
in my opinion, that's not what we see in bear markets.
Right. It's like I like his basketball analogy. Yeah, if LeBron's scoring, the team's going to win, and that's Nvidia. And
you're a big hockey fan, too. We need to see more out of Kreider and Zabita.
I wouldn't know any
Come
of
on,
it. But it is interesting, Tim, just turning to you quickly on this, even for all that we were making of stocks, the real outperformers this year have been commodities, have been Bitcoin. I mean, some of those, this could be the third year out of four that commodities take the leadership role.
I'm long GDX. I'm long gold miners. The copper move is a little too speculative. I think so. It's a little scary, even though Dr. Copper should be telling us something, not just about supply constraints, but a little bit about the demand side. There's M&A dynamics going on in the commodity space too. So I do think it's been a fascinating time. I think gold will continue to move higher. I think gold has had a great run as well. But you could look at a 20-year chart on gold. It's one of the best charts you're going to see. And that's a function of deficit rates, the same things that are driving Bitcoin.
Yeah.
Why don't you react, Michael, on Bitcoin and Ethereum here?
Yeah, I couldn't agree more. As a market technician, that 20-year chart in gold is absolutely phenomenal. Same thing we are seeing in Bitcoin versus Ethereum. With the Ethereum news yesterday about the ETF, you would imagine that Ethereum would be outperforming. But I actually have this chart showing that other than when the rumor came out about the Ethereum ETF, you can see here that initial spike on May 20th. That's when the whole world found out that there was potentially a approval of an Ethereum ETF. But ever since then, and before then, Bitcoin has been outperforming in this chart, and that's why it's moving sideways to slightly lower. So it seems like with gold doing well and talking about the inflation trade and all that, Bitcoin is doing the same thing as the quote unquote digital gold of the world. It seems to be outperforming Ethereum, which may lead to this Ethereum ETF being a bit of a sell the news event as people go back into this commodity driven crypto as opposed to a more usage driven crypto.